So two aspects are there. In the previous class we have seen change in method of depreciation as well as estimations. In the previous class we have completed how to handle the changes in estimation. The scrap value as well as the life is in estimation only. That estimation may be always changing due to various parameters. As per the estimation changes, you have to change the depreciation calculations year after year. That's how we completed in the previous illustration. Now, we will be now focusing on change in method of depreciation. Change in method of depreciation is nothing but if you are following one of the methods like SLM or WDV, you want to shift from existing method to the new method. Will I be able to do that? So, if I do, how can I show all these things in our books? So, these are the things that are going to be covered here. Now, situation in changing the method of depreciation. I follow SLM method since very long ago. In this year, I thought to change myself to WDVM method. 3 years already I followed SLM method. The life has 5 years. The life of the asset being 5 years. Okay. So the life of the asset being 5 years. Already 3 years over. Still we have 2 years. For the remaining 2 years, I thought to shift myself from SLM to WDV method. So out of the 5 years of life, 3 years we already followed SLM method. Now we plan to follow WDV method. This is called change in method of depreciation. The change in method of depreciation could be done because of the two reasons. One is as per the legal requirement or as per the accounting standards given by the institute and government, or by changing one method to the other method, the financial reporting may be better. Okay, that is called better presentation. For these two reasons, we can change. One is for legal or accounting standards requirement, accounting standard or statute. Statute is, you can use the term legal requirement or laws requirement or accounting standards requirement. So accounting standard is nothing but standardizing the presentation of your account for the uniformity purpose. At the foundation level, you just understand this is just a standardization process. At inter level, you study all the accounting standards in detail. Okay, if there are lots of confusions on valuation, reporting, measurement of the assets, for example, closing stock. Closing stock, we purchased at rupees 1 lakh. But as on the year end, the value of the closing stock being 1.2 lakhs, but we need to incur 30,000 rupees expenses for sale. This is what about the fair market value. Now, in your trading account, what value you have to show as your closing stock? Okay, as your closing stock. Then there's a confusion. You purchase the closing stock for 1 lakh. But today it can be sellable for how much? 1.2 lakhs. You can sell it for 1.2 lakhs. On selling 1.2 lakhs, you have to incur brokerage and packing and carriage outward expenses by yourself. It costs us 30,000 rupees. Ultimately, you will get only 0.9 lakhs, which is called net realizable value. Okay. Can I show at 100,000 or 90,000? Which is correct one? If I show 100,000 rupees at the cost, unwantedly you are raising the profits of the current year. Actually, in the next year, you can sell it for 90. Definitely, you will be facing the loss in the next year. So, in order to show perfect one, you have to consider these two values and one of them, especially whichever is lower will be taken. 90,000 will be taken. Whichever is lower will be taken, not 100. If you are restating the closing stock value rather than 100 as 90, you will get the correct profit. You will get correct profit. Otherwise, unwantedly, you are boosting the profit. Ultimately, it spoils the profit in the next year. This is the standardization method. We study that in accounting standard number 2 at your inter level. Is that okay? Standardizing. I have the doubts, sir. At what value the closing stock will be shown in my book? At the cost or today's realizable value or some other value, sir? Don't worry. For all the accounting people, you have to follow this one. What's that? cost or NRV, whichever is lower. Who says so? Accounting standard number 2. You just study the rules and follow it. In case depreciation, then rules is there. So you have to follow the rules and adapt that. So all the techniques what we have followed here in depreciation chapter, is as per the accounting standards only. Property, plant, equipment. Property, plant, equipment. Is that okay? So because of the accounting standards requirement only, we may supposed to change. Earlier we followed SLM method. Immediately government pronounced that you have to follow only the WDV method. So I shifted from SLM to WDV method. Or this presentation will be better than the earlier presentation. For that also you can change. This change could be of two method. One is prospective, another one is retrospective. Second one is retrospective. Prospective means if you follow SLM method under WDV method, SLM method for 3 years, from the fourth year onwards, you have to follow WDV method from year 4 to 5. This is year 1 to 3. This is prospective. Under retrospective, SLM method you might have followed from year 1 to 3. In the fourth year, you made a decision to follow WDV method. This WDV method will be applicable from 1 to 5. Sir, earlier 3 years we followed the SLM method, sir. You have to restate this one also under this method. You have to restate. I'll explain 2 illustrations so that this concept you will understand easily, very easily. See, 2 methods, prospectively, second one is retrospectively. I'll solve the illustration, you will understand easily, right? So one of the easiest one of these 2 being prospective method. So I'll try to finish up that illustration now. Illustration number 7. Come on, join with me to solve this illustration. It's very easy. Okay. Give the machinery account. So you have to prepare only machinery account at the end of each year from 2020 to 2024. So machinery account. Clear? See, a firm purchased on 1st January 2020 certain machinery for rupees 19 lakhs 40 and spent 60,000 on its erection. Any cost is spent for installation until it is getting ready to use for intended purpose. All these things are clubbed. The cost of the assets should be 20 lakhs. The cost of the assets should be 20 lakhs. On 1st July in the same year, additional machinery costing 10 lakhs was acquired. In the same year, we purchased one more asset. We have to account for 2022, 2024. So 4 years, 2020, one full calendar year, 21 second calendar, 22, 23, 24. Okay. 20, okay. From 20. So 20, 21, 22, 23, 24. So almost 5 years. Is it so 5 years? Let's see. Yeah, we'll try to solve. Okay. 20 end, 21, 22, 23, 24. Okay, 5 years comes. Okay, let's see. Right here. On 1st July 2022, the machine purchased on 1st January 2020 having become obsolete. So what happens? So 1st January 2020, they purchased an asset for 20 lakhs. On 1st July of the same year, they purchased another asset for 10 lakhs. On 1st July 22, the machinery purchased on which date? 1st July 22. Okay, the asset purchased on January 2020, this asset having become obsolete was auctioned for 8 lakhs. Obsolete, so it's planned to be sold for 8 lakhs. Okay. On the same date, a fresh machine was purchased. So this 20 lakhs worth asset sold on this date. On the same date, one more asset purchased for rupees 15 lakhs. Depreciation was provided annually on 31st December. So calendar year end starts with 1st January, ends on 31st December. And the rate of depreciation being 10% per annum on original cost method. So SLM method will be followed. There the depreciation rate being 10%. In 2023, however, the firm charged this method of providing depreciation and adapted the method of writing off 20% of the written down value method. From this date up to 2023 end, okay, we have followed. So in 2023 onwards, It means 2022 end, we have to follow the old method. From 23 onwards, we have to shift ourselves from which method? SLM to WDV method. Okay, WDV method, where the rate of depreciation under WDV method being 20%. The shifting happens on 2023. Now you pass the journal entry as usual. 1st January 20, 1st January 20, bank, we purchased an asset for rupees 20 lakhs. In the same year, on 1st July 20, one more asset purchased, bank, 7 lakhs. Sorry, 10 lakhs. 10 lakhs. Now, in the year end, we have to provide the depreciation. 31st December 20, depreciation. Depreciation being for this asset, you have to calculate depreciation at the rate of 10% for the full year, 2 lakhs. Another asset, 10 lakhs, we purchased on 1st July. From the 1st July to the year end, we have 6 months, so into 6 by 12. Then 0.5 lakhs. The overall value being 2.5 lakhs will be the depreciation the very first year. Now find out the balance carried out. Total value 30 lakhs. 30 lakhs. You have 27 lakhs 50,000 being the balance. 1121 balance being 27 lakhs 50,000. 27 lakhs 50,000. Isn't it? In the year 21, we don't have any other operations. You have to calculate depreciation for this year. 31, 12, 30 depreciation. Depreciation in this year, we have 2 assets. Overall 30 lakhs. I am going to create the depreciation based on the SLM method, the original value. So, original value of these 2 assets being 30 lakhs. As we use this for the entire year, 10% will be calculated, which is 3 lakhs. Am I right? Now, tally this to find out the balance here. 27 lakhs 50,000. Balance carried out. 24 lakhs 50,000. In the next year, 1122, opening balance being 24 lakhs 50,000. 24 lakhs 50,000. Now, in this year, on 1722, this asset sold for 8 lakhs. If any asset sold, what do you have to do? You have to find out 3 things. Depreciation of the asset sold up to the date of sale. Second, you have to find out the WDV as on the date of sale. Third, you have to identify whether there is any profit loss. 3 items you have to carry on. Now, third working note. 1120, the original value being 20 lakhs. For the year 20 and 21, 2 years already completed, you have to find out the depreciation for the 2 years. At the rate of 10% per year being 2 lakhs, for the 2 lakhs, 4 lakhs we might have created already, isn't it? For the 2 years, 2.5 lakhs plus 3 lakhs, 5.5 lakhs we have provided the depreciation. Out of 5.5 lakhs, 4 lakhs is for the year 2021. And then after that, the WDV value being 16 lakhs. WDV value being 16 lakhs. As on 31st December 2021. Now the asset sold on 1st July 22. In the year 22, this asset used for 6 months. You have to create the depreciation for the 6 months. 1st July 22, depreciation. On this, at the rate of 10% for how many years? Half year. 1 lakh will be the depreciation. Am I right? Now WDV as on the date of sale being 15 lakhs and the amount realized on sale being 8 lakhs. Auctioned in bidding it is sold. So net value I get here is 7 lakhs. This is being the loss. So I have to record all the three items. Depreciation on the asset sold during the year of sale up to the date of sale. First you have to write. Collection amount should be written. Profit and loss should also be incorporated. See here. First, depreciation for the year. As on the date of sale 1/7/2022, depreciation on the asset sold up to the date of usage and up to the date of sale. Thereafter, you get collection bank on auctioning this for 8 lakhs. Auctioning this. And we face loss on this sale. If there's a gain, it should be in the debit side, but as the loss happens, it should be in the credit side. This value being 7 lakhs. This value being 7 lakhs. On the same date, one more asset purchased for 15 lakhs. Which date? The same date, 1/7/22. Bank. How much is this? 15 lakhs. Now go to the year end. 31st December 22. Calculate the depreciation. Fourth one. This is adjustment number 3. Fourth adjustment. Currently we have two assets. This asset is sold. We still have this asset and newly purchased assets. The asset purchased on 1st July we used in this year fully. So eligible for full year's depreciation. Another asset, this asset just now purchased in this current year, that too on 1st July. From 1st July to the year end we have used only for half year. So then the value being 0.75 lakhs. 0.75 lakhs. Overall 1.75 lakhs is the answer. So 1,75,000 is the depreciation here. 1,75,000. And then find out the balance if any. 39,50,000. 39,50,000. What the value you now have balance? Come on, tell me. What is the balance you have? 21,75,000. So 21,75,000. Is it right? And transfer to the next year 1123. Balance being 21,75,000. Now from the year 2023, they have converted their method of depreciation from SLM to WDV method for this year end 31st December 2023 depreciation. This one is working note number 4. This one is working note number 5. Okay. Or like this way you can calculate. Under WDV method, whatever the WDV value you have now, on that you have to calculate depreciation at the rate of 20%. Since the earlier year, since the day 1 up to the earlier year, we followed the SLM method. From this year onwards, we are supposed to follow WDV method. We have 21,75,000 for that 20% being 4,35,000. Okay. Now find out the balance here. 21,75,000, 21,75,000. You get the balance here. The balance being 17,40,000. So 1124 balance. 17,40,000. Then next year, 31st December 24, we have to calculate up to the year end. Now the depreciation on this being again WDV method, right? So whatever the WDV you have on that 20% will be calculated, which is 3,48,000. Find out the balance here. 17,40,000. 17,40,000. Balance carried on and the date being 13,92,000. Clear? Yes. Make a note of it. Now, change in method of depreciation happens retrospectively. Probably 3 years you may follow SLM. Suddenly, from the fourth year onwards, you want to follow WDV method. But from the fourth year onwards, you plan to go for WDV method, will have the impact since the day one of the purchase of the asset itself. You do the reverse calculation also. Let's see. So you have to prepare machinery account in the books of Green Channel Company Limited for the year 21 to 24. Okay. So machinery account. Machinery account. Green Channel Company purchased second-hand machine on 1st January 2021 for rupees 1,60,000. Overhauling and erection charges amounted to rupees 40. If you purchase any second-hand asset, including the overhaul, first time expenses related to the repair and overhauling is also part of the cost of the asset. So now the assets value will be 160 plus 40, 2 lakhs would be considered. So when 1st January 21, 1st January 21, bank, the value being 2 lakhs. Another machine was purchased for rupees 80,000 on 1st July 21. On 1st July 23, okay. So then for the year 2021, we have one more purchase. Let me finish up posting that first of all here. 1st July 21, bank. Another asset purchased for 80,000. Here make the correction in the text. On 1st July 2023, leave the 21, 22, 23. The machine installed on 1st January 21 was sold for rupees 1 lakh. This is going to be sold later on. On which date? 1st July 23, we plan to sell this. So 21 we use, 22 also we use. In 23, half of the year it is planned to be sold. That too, the sale value being 1 lakh. We will do it later on. On the same date, another machine also purchased for rupees 30 and was installed on 30th September 2023. So you can calculate the depreciation not on the date of installation. You have to calculate the depreciation. Not on the date of purchase. From the date of usage, you can calculate. Though the asset purchased on 1st July 2023, but installed and started using only from 30th September. So you can calculate the depreciation only from the date of usage. 30th September. Under the existing practice, the company provides depreciation at the rate of 10% per annum and original cost. However, from the year 2024, it decided to adapt WDV method and change of charge depreciation at the rate of 15% per annum. This charge was to be made with retrospective effect. Retrospective effect means since the day one, not from the current year. Since the day one of the purchase itself, you have to follow the SLM method. WDV method. Sir, I have followed already SLM method. What can I do? Recalculate under WDV method, the new method you propose to adapt hereafter. As per the new method, what should be the closing balance? No, you arrive at closing balance by doing some debit or credit in the account. Some debit and credit. Under SLM method, you found that the value being 1 lakh. But retrospectively, you have to use SLM method or WDV method. Then what happens if you are using retrospectively, the value being either 60 or 1,20,000. This is what about the WDV under SLM method you adapted earlier. You want to shift this under WDV method. So then the WDV value under WDVM method being 60. You find out the value under SLM method and found that the WDV value being 1 lakh by the end of third year. In the fourth year onwards, you plan to go for WDV with the retrospective effect. Then since the day of purchase, you adapt the WDV method and find out the closing balance. The closing balance under the other model is totally different. This is the first model. This is the changed model. The changed model gives me totally different value. Now check whether the value is lesser or higher. The value is lesser, sir. Then the difference between these two 40,000, you know, can be debited to the P&L account by subtracting. Debit to P&L account. Sir, the new values 120s are higher than the old value, then that another 20,000 can be added back and credited to the P&L account. That's all. That's how you can do the adjustment. Okay. I'll solve this illustration to make you understand the logic easily. Retrospectively, from the past date, prior period of adjustment is required as recalculate depreciation retrospectively. So you have to recalculate retrospectively as per the new method. In case of deficiency, debit to P&L account. In case of surplus, credit to the P&L account. That one extra point you have to do. Rest will be the same. Let's see now. I am going to work out this. Now, here, in the very first year, 31st December 21, depreciation. What is the depreciation for the 20 lakhs? 2 lakhs, you have to calculate for full year depreciation at the rate of 10%. 2 lakhs. Another 0.8 lakhs for the 10% for half year from the date of usage. 0.4 lakhs. The total value be 2.4 lakhs. 2 lakhs 40,000 is the depreciation. Is that clear? First year is over. 2 lakhs 80,000. 2 lakhs 80,000. Balance carried on being. This is okay. 24,000. I made a mistake here. 2 lakhs into 10%, 20,000. Here it is 4,000, 24,000. Sorry. Okay. 24,000. What is the final value? 2 lakhs 56,000. Next year, 1122 balance. 2 lakhs 56,000. No transaction happened this year. Then for the year, you have to calculate depreciation fully. Here for 2 lakhs, 10%, 20,000. For 0.8 lakhs, 10%, half of the year. Sorry, it's also for full year. 80,000 rupees. 2 lakhs 80,000. Am I right? Okay, 28,000. 28,000. 20,000 and 8,000 and 28,000. Find out the balance here. 2 lakhs 56,000. Balance here being 2 lakhs 28,000. Next year 1123 balance being 2 lakhs 28,000. In this year on 1st July 23, the machine installed on 1st January 21 was sold. This machine was sold. So on sale, you have to calculate three things. One is depreciation for the year in which the sale happened. You have to find out the WDV. Third one is you have to find out the profit and loss on the sale. Now, 1121, the original value of the asset being 2 lakhs. Before the sale, already we have used 2.5 years. Currently, we have depreciated for the year 21 and 22. So 2 years depreciation at the rate of 10% being 20,000 per year. For the 2 years, it is 40,000 rupees. WDV in the year beginning of the year in which the sale happens, 1/1/22, 23, balance being 1,60,000. Sold on 1/7/23. Am I right? In that year of sale, we use this asset for 7 months. You have to calculate the depreciation for the 7 months from the original value. We are following the SLM method. So for the 2 lakhs, you have to calculate 10%. 20% on 2 lakhs being 20,000. But for half year, it should be 10,000. So the value being 1,50,000. This is what about the WDV as on the date of sale, but sale value here being, okay, what is the sale value here? Okay, what is the sale value here? sold for 1 lakh. 1,50,000 worth asset but sold for 1 lakh, then we lose how much? 50,000 rupees. This is called loss on sale. I now record that here. On 1/7/23, calculate the depreciation on the asset sold up to the date of sale in this year alone. In this year, it is 10,000 rupees. Amount collection on sale of this asset being 1 lakh. Because of the sale, do you get profit or loss? Here we get the loss, so loss should be the credit side, loss on sale. The value being 50. Otherwise, it should be posted in the debit side. We have done this one, 1/7/23. 1/7/23. Then immediately we purchased one more asset for 30, but installed only on this date. From the installation date only, you have to start count all these things. So 39/23 bank. This value being 30,000. And rewrite here as on the year end 31st December 23, depreciation being, you have to calculate the depreciation for the two assets we have. This is working note number 3. Here the depreciation, fourth adjustment. We have two assets. This asset sold, we still have these two assets, 80 and 30. For 80,000 rupees worth asset, we used for full year, so 10% depreciation will be taken, 8,000. Another newly purchased asset, 30,000. For this also depreciation being 10%, but we purchased and installed on 30th September. From 30th September to the year end, 3 months is there, so you have to calculate for 3 months. 3/12. Then the value being 750. The overall depreciation being 8,750. Working note number 4. 8,750. Yes, come on, find out the total now. 2,58,000. 2,58,000. Find out the balance here. Come on. What's the balance here? Hmm? Hmm? 89,250. You transfer to the next side. 1,124 balance being 89,250. Now, from the year 2024, it is decided to adapt WD method, and the rate of depreciation being 15%. Now we have to change. In case of prospective, you can directly calculate at the rate of 15% on this value. That is called prospective, but it's not prospective, it's a retrospective. Since the day of purchase itself, you have to follow only the WDV method. So you say, sorry sir, I have followed SLM method so long. No problem. Recalculate on the WDV method. If there is any difference, that difference will be adjusted here. Is that clear? Let's see. Let's see. So we have two assets. Clear. So 1/7/21. 1/7/21. Original value of the asset 2. Asset 1 was already sold. We don't have any balance. So you can directly calculate for the asset 2. Asset 2, so purchase price being 80,000. And for the year 21, depreciation calculated for the half year at the rate of WDV method, new method, 15% will be adapted. Come on, calculate 15% for half year. 6,000, am I right? 74,000 is the WDV on 1/1/22. Now for the year 2022, you have to calculate the depreciation at the rate of 15% on this. Okay. 11,100. If you subtract the balance being 62,900. Balance. That is the WD value. This is on 1/1/23. Now for the year 2023, again we have to calculate the depreciation at the rate of 15%. 9435 9435, and then the balance value being 1124 WDV 53,465. Similarly, we have the next asset number 3. For this, we purchased and installed on 3923 3923. Okay, original value being 30,000. Original value being 30,000. And you have to provide the depreciation for the year 2023 at the rate of 15% for quarter month 3 by 12. 3 by 12. Huh? 1125. 1125. So then, as on 1124, the WDV being 28,875. Now, what about the total WDV? Both assets put together 53,465, 28,875. The overall value being 82,340. But this is as per the WDV method. In case of SLM method, we followed the SLM method. What balance we have? 89,250 we have. Okay. So as we followed which method? SLM method in the previous years, we have more balance. If I add the WDV method, the balance should be lesser only, no? It should be only 82,340. So now I am shifting from here. It means rather than showing this value being 89,250, it should be shown as 82,340 only. For that, what can I do now? I can create the depreciation here. So 1124 P&L account, adjustment for the prior period item. Adjustment for the prior period item for shifting from SLM to WDV method. So from shifting from SLM to WDV method, that excess amount should be now removed. Adjustment for shifting from SLM to WDV. How much I have to reduce? 6,910 should be reduced. Once it is okay, no problem. In case of reverse, you have to credit. So here we have shortage, so debited to the P&L account. In case of surplus, it can be credited to P&L account. Now for the year end, 31st December 24, you have to calculate the depreciation. Depreciation being on the WDV as on the date. For this, 15% will be calculated. After following the WDV method, the final balance being these two and summation of this summation of these two being 82,340. For that 15% you have to calculate. Come on, tell me what's the value? 12,351. 12,351. Yes, that's all. Come on, finish up tallying and get the answer finally. Balance carried out. What's the value? See how to use the calculator. You don't know how to use the calculator also. Come on, see here. Use this calculator for percentage and other calculations. 82,340. You know, into 15%. 15 press the percentage, you will get the answer. Okay, 12,351. Now I have to find out the balance after subtracting this one, right? In your calculator, I don't know will I get here. In your calculator, just press minus and equal, you will get the net value. Check. Here it will not get. I don't get here, but you can get in your calculator. See, I'll show it again. What's the value? 82,340. On that 15%, you know, so into 15%, you get this value. If you want to get subtracted value, just press minus and press equal, you will get the final answer. Are you getting this value? If you want to add plus equal, you will get the addition value. In your non-scientific calculator, year on year, you can use the calculator simply. How? Every year 15%, subtract, minus and equal. Again 15% minus and equal. That's how you can get the answer easily. Rather than typing the values again and again, you can do this way also. Clear? Yes, come on, make note of it. Now, you have to understand the concept of revaluation of asset. Revaluation of asset. See, original value of the asset being 100, you have depreciated 20 rupees, 80 rupees will be the WDV value. But the depreciation is only approximate estimate, not the real one. We are not sure whether the 20 rupees depreciated is correct one or not. So we can go and cross verify with the market. If you go and check the market value seems to be only either it may be 70 or it may be 90, maybe 85. So by the end of first year, if I try to sell in the market, what would be the recoverable value? Either it may go 70 less than the value what we show, or it may be more than the value what we have shown. It may be not only the value we recovered in selling the market, sometimes the most used benefit also, usable benefit, cash flows. You can take that, you can study at your next level. In this case, we lose 10 rupees, am I right? In this case, we lose 10 rupees. This loss will be debited to the P&L account. P&L account debit side. In this case, rather than loss, if there is a gain, that gain will be transferable to revaluation reserve account, credit side. Revaluation reserve, credit side. Is that clear? In case of loss, that loss is debited to the P&L account. In case of gain, it should be credited to revaluation reserve. In case of gain, it should not be credited to the P&L account. Loss debited to the P&L account, but gain credited to the revaluation reserve, not in the P&L account. Not in the P&L account. Okay, profit then credit. Okay. Clear. That's the logic. Suppose again next year you create the depreciation 20 rupees. After that, the WD value being 50. Again you cross verify. You cross verify in the market. The market may show the value being either 45 or the value may be 55 or the value may be 65. Three scenarios are there. After the depreciation, the next year we face the value being 40. We found the value being 50, but on verification, it may be 45. If it is being 45, we lose 5 rupees, right? Further loss is 5 rupees. That further loss can be debited to where? P&L account. P&L account. Okay. In case of gain, remember, in case of gain, if there is any loss related to this debited in the P&L account earlier, cross verify. In case of gain, check whether there is any revaluation loss already adjusted in the P&L account. Yes, sir, we have adjusted up to 10. In that case, to that extent, any gain is there, no, can be credited to the P&L account. So, can be credited to P&L account. Okay. Gain is 5. 50 plus 5, 55 is the closing value. 50 becomes 65. 15 rupees gain is there, right? What can we do, sir? Find out if there is any loss related to this asset earlier debited to the P&L. Yes, sir. How much? 10 rupees. To that 10, it will be credited in the P&L account. Credited in the P&L account. Okay. Sir, still we have another 5 rupees. Another 5 rupees if we have, then that should be credited in the revaluation reserve account. Clear? So, if there is a loss debit to P&L account, in case of gain, it should be revaluation reserve in a very first year. In the next year onwards, if there is any loss, okay, check whether there is any revaluation gain. So, no, sir, there is no revaluation gain up to now. Okay. Then, in case of loss, debit to P&L account. In case of gain, to the extent of revaluation loss in the previous year will be credited to the P&L account. If the gain is beyond the revaluation loss previously recognized, that will be considered as revaluation reserve upon in credit side. Revaluation reserve upon in credit side. Here, 20 rupees is the depreciation. Now the WDV being 65. In the next year, we recognize this value being probably 63 or maybe 55, or there will be gain 75. How can we record? Cross verify in the next year when there is a revaluation profit or loss in subsequent period. If there is a loss, in case of loss, verify if there is any gain available in revaluation reserve earlier. Yes, sir, 5 rupees is there. Then this loss can be adjusted in. This loss is adjusted in revaluation reserve account. Revaluation reserve account to the extent of amount available debit. Sir, 55, sir, loss is 10 rupees. Loss is 10 rupees. Is there any revaluation gain? Yes. How much we have? 5 rupees. To the extent gain available can be debited in the revaluation reserve account. Revaluation reserve. Clear. Beyond that, still we have lost another 5 rupees that can be debited to the P&L account. Debit of P&L account. Clear? Clear? If there is any loss, verify whether there is any revaluation reserve. Yes, sir. Then to that extent of revaluation reserve should be debited. Beyond that, it should be transferable to the P&L account credit side. Now, gain is there, sir. 65 becomes 75 gain. If there is any gain, any revaluation loss exists earlier, verify that. No, sir, no loss exists. Then the entire 10 rupees will go to the revaluation reserve account. This will go to the revaluation reserve account. Credit side. That's all. So, step number 1, I may write here. Step number 1. First time. In case of profit, should be in the revaluation reserve account. In case of loss, it should be P&L account debit side. Clear? Second year. Second time. In case of profit, okay, any loss debited in P&L account exists already. To that extent, it is going to be reversed by crediting. First step. Second step, okay, any loss. If we don't have the loss, sir, we don't have the loss. If you don't have the loss earlier, then revaluation account credit side. Okay. In case of loss in the second time, cross verify if there is any revaluation reserve first. Then you can debit to revaluation account. Yes, you can debit to revaluation reserve. Okay. You don't have the revaluation reserve used already, then you can simply debit to P&L account. Clear? These are the two steps. So this is what I explained here. C. Revaluation of asset in case of profit. In case of profit. In case of profit, what you have to do? First, you have to adjust any loss already debited in the P&L account. P&L account if any revaluation loss already charged. Second, after that, if you still have any profit, will be named as revaluation reserve account. Second, can be credited to the revaluation reserve. This is a scenario. In case of loss, first cross verify if there is any revaluation reserve available. If it is available, debit to that extent. In case of loss, debit to that extent. See, first revaluation reserve exists, then you have to debit that first of all. After debiting, still you have the loss further. What you can do? You can charge to the P&L account. You can charge to the P&L account. Is that okay? So what the picture I have given is explained in this two line. Okay, come on, guess again. Profit or loss, revaluation profit or loss. In case of loss or profit. Okay, in case of loss, first what you have to do? You have to adjust in revaluation reserve account. If you have, okay, revaluation reserve account exists, then you can adjust it. After that, second, if the revaluation reserve account doesn't exist or over, it's over now, no balance, then this can be debited to the P&L account. Okay. In case of profit, that profit should be credited where? Profit means it should be credited where? Number one. Check whether is there any loss during the revaluation period prior we debited to the P&L account. Yes, sir. We have the revaluation loss debited in the P&L account. P&L account debited with the revaluation loss previously. Okay, then you can credit this. After that, any balance you have in no that can be credited to the revaluation reserve account. This is the simple steps. Okay, come on, make a note of it. So we have the other models. Just you understand this, we don't have the illustration for all these things. Third one is all about accelerated depreciation. Original value of the asset minus scrap value divided by life. This is all about depreciation, you know. Original value being 1 lakh, scrap value being 10,000, life being 3 years. We assume the life being 6 years. Then what is the amount of depreciation? 15,000. But the seller specifies that you need to use the asset in a day shift of 8 hours. But the buyer used it for 12 hours. 1 day shift, 4 hours in the late hours. So in total they are using 12 hours. Almost 1.5 times excess. Or another 8 hours, night shift, day shift and night shift. Almost 12 hours they are working. So as per the previous case, 15,000 depreciation will be applicable per annum only if it is used for 8 hours. What happens if we use for 16 hours? 2 times depreciation will be there now. So 30,000 will be the depreciation. That is called accelerated. How many times you are using excess? What is the company specification? How many times you are using it excess will be multiplied with. So here accelerated rate of depreciation. Regular rate of depreciation may be 10%, but you are using 2 times, 2 shift or 1.5 times or 3 shift, then 10 into 2 will be multiplied. The rate of depreciation should be 20%. We already studied some of the years digits method already. And apart from that, some source based. You purchased 1 lakh rupees worth asset, it has a life of 4 years. By the end of fourth year, what happens? By the end of fourth year, what happens? The asset no more worth, no more worth for working. You throw it off scrap. You want to replace a new one? No. Do you have the cash for that replacement? So rather than you think I don't have the cash at the time of replacing, what can I do? I can start investing small amount every year. At the time of replacement, I can withdraw and use. No. For that, we have these methods: sinking fund method, annuity method, insurance policy method. Under sinking fund method, say the asset being 1 lakh, life being 5 years. Yearly 20,000 rupees will be my depreciation. What I do know, to the extent of depreciation, every year I will invest in the bank. Or I am keeping this value every year in the bureau or in my locker. 20,000 rupees. By the end of fifth year, the machine, old machine got scrapped. I can withdraw the entire 1 lakh rupees. I take that 1 lakh rupees from the bureau, I can purchase a new one. So I don't have any problem of money. But if I'm investing in the bank, the banker will give the interest, no? So definitely if I invest 20 for the 5 years, the amount may be 1 lakh plus some interest component. But I want only 1 lakh, no? So that 1 lakh I need to invest probably around 16,000 like. So for the 5 installment investment I have made 16 into 5 times, I get 80,000 rupees. Together with interest, I may get 1 lakh. Together with interest, I may get 1 lakh. Is that clear? That is called sinking fund method. You are making yourself money available for replacing by the end of nth period. Is called sinking fund method. Okay, not only depreciating by debiting to the P&L account, to that some extent, you deposit in the bank also. Two things: depreciation, investment also made. So you withdraw the investment for replacement. I thought the asset will come for 5 years. Suddenly, by accidental theft in the second year, everything lost. Everything lost. What happens then? Second year, everything is lost. Clear? I have only 40,000 rupees, but I need 1 lakh rupees to replace the asset. How can I manage? Rather than investing the money in the bank, I can just pay the insurance premium. Any accident theft happens, the insurance company will give the compensation. That method is called insurance policy method. Insurance policy method. This is the second method. So number one is fund replacement. You are making the fund available for replacing the asset. Next one is, okay, fund is available, but suddenly anything happened the half of the life itself or the beginning of the life, huge money I need to invest. How can I manage this? Insure it. Insure it. Now, original value of the asset being 1 lakh, life being 5 years. What is the amount you are losing every year? You are losing 20,000 rupees every year. Am I right? What is your loss? The value loss being 20,000 per year. Yes or no? No. It is not 20,000 being the loss. It's more than 20,000. How? If I could have invested that in the bank, that bank could fetch me interest, right? If I have that 1 lakh rupees in the bank, every year this bank will give me 10,000, like at least 10%. In a matter of 5 years, I'll get 1 lakh 50. So actually, I'm not losing 1 lakh. I'm losing 1 lakh 50. Not only the amount invested, that amount I borrowed, because of the borrowing I'm paying interest, that is also my loss. Or because of this investment, I have missed to invest in the bank where I'm losing the interest income. I'm losing interest income. So not only the asset value I'm losing, interest component on that also being lost. That will also be considered for the depreciation. In this case, depreciation will be 30,000, not 20,000. 20,000 for the value loss, another 10,000 being revenue loss, interest loss. So depreciation under this method includes interest for investment on asset. Not only the value of the asset I lose, interest should also be considered here. These are the three methods. And we have the another famous method is called depletion and benchmark rate method. So based on the consumption. So the value of the asset being 1 lakh, the scrap value being 20,000. Okay, this machine will work for 10,000 hours. So if you purchase the light, bike, car, and etc., what happens? The seller will say this car will work for 2 lakhs kilometer. This light will work for 4,000 hours. Like, So if you don't use or sparingly use, the life will be longer. Car, 2 lakhs kilometer per month, you are driving only 1000 per annum, 12,000, so it will go for more than 10 years, sir. Sir, every day I am driving around 500 kilometers, sir. In a month, I am driving around 15 to 20,000. Then for 2 lakhs, it's a matter of 10 years. Based on the hours driven, means hours used, kilometers driven, the depreciation will be calculated. So this case, original value minus scrap value, 10,000 hours it will work. Then depreciation will be 8 per hour, 8 rupees per hour. Okay, machine hour method, production units method, kilometer method. Kilometer method will be useful for what? Bike, car and all. Machine hour, some machines like computer and all will work for so many hours. That's what about machine hour method. Sometimes the asset will give us production output. Sir, this machine will help you to produce 1000 units, sir. Then depreciation per unit of production could be calculated. Okay. And apart from that, we have the depletion method. Depletion method. Depletion method is applicable for the natural resources. Natural resources. See here. Pensive Corporation in subsidiary Pensive Oil drills a well with the intention of extracting oil from the known reservoir. So it's a mining industry. They can now extract the oil. Oil rigs were installed. Okay. So for that, they purchase the land, they construct the road, they use the developed drill pad construction, drilling fees, all almost 5 lakhs 43,000 they spend for drilling and extracting the oil already. They spend. In addition, Pensive Oil estimates that it will incur a site restoration cost 57,000 once extraction is completed. So initially they spend 5 lakhs 43,000 rupees. Not only that, after extraction, the land gets totally damaged. The landowner says you can extract, but the last you have to restore the site. You have to restore, make it restore. Oh, I have to correct this now. Yes, for that it costs me 57,000. So initial cost, restoration cost. Okay, and the total depletion base of the property is 6 lakhs unit. So how many units can be extracted? It is not rupees, it's 6,000 units. Barrel can be extracted. Right. Okay. Total cost being 6 lakhs. This is what about the total cost? 6 lakhs. 5 lakhs 43,000 and some 57,000. No, it is rupees only. 6 lakhs is the total cost. 5 lakhs 43,000 is the first time cost. 57,000 is for what? Restoring cost. Overall, we spend 6 lakhs. And Pensive geologists estimate that the proven oil reserves that are assessed by the well are 4 lakhs barrel. In this oil well, no, they can extract 4 lakhs barrel. So they have spent 6 lakhs rupees for extracting how many barrels? 4 lakhs barrels. So divided by 4 lakhs. So naturally, 1 rupee 50 paise per barrel will be your depreciation. Pensive Oil extracts 1000 barrels and 3 lakhs barrels in the first year and second year. So original value you spend for this well being 6 lakh. The depreciation for the first year being, you have extracted 1 lakh barrel per barrel, the depreciation rate being 1.5. So 1 lakh into 1.5, 1.5 lakhs will be the depreciation in the year 1. The WDV by the end of first year being 4 lakhs 50,000 rupees. And the depreciation for the second year, where you are extracting 3 lakhs per barrel cost as 1.5 depreciation. 3 lakhs into 1.5, 4.5 lakhs is the depreciation. Now it becomes 0. So already we studied the methods of depreciation, means the reasons for depreciation. One is depletion. The depletion method is useful for mining industry, oil, minerals extraction and all, right? So fourth one, depletion. Physical deterioration of any natural resources like mines, oil wells. I have given one example for the oil wells. The overall cost for this oil well being 6 lakhs. This oil well cost can be depreciated over the facilities available or minerals available or oil available. Here oil, 4 lakhs barrel can be extracted. So 6 lakhs for 4 lakhs barrel means per barrel it costs me 1 rupee 50 paise. Based on that you can claim the depreciation. So here revalue this one. Depletion method. Amount of depreciation under this method is original cost plus restore cost. If there is any scrap, you can subtract. Divided by resource available, any units, maybe barrels or maybe ton, maybe kg, maybe liters. We are not sure with what base we can use. Any base you can easily decode from the illustration. Hope you will be able to understand all these things. Apart from that, we have revaluation method and repairs provisions method also. These are the other two methods. Especially this revaluation method is suitable for loose tools. In a company, they have small nuts and bolts. How can we value the nuts and bolts, sir? It's very tough. No, if there is a one machine you can depreciate in case of nuts and bolts. The valuation is not good enough. The valuation is not good enough. So what we can do is we just physically count what is the total nuts and bolts we have in the beginning, maybe 1 lakh rupees. How much nuts and bolts you purchase in this year, you can add this 11 lakhs. How much nuts and bolts at the year end you have, maybe 2 lakhs. Okay, so this is opening, this is purchases, this is closing nuts and bolts you have, balance 9 lakhs missing, that will be considered as depreciation under revaluation method. Like raw material consumption, this will be the revaluation method of consumption. Opening value plus minus purchases minus closing stock is the amount of depreciation. The 11th one is all about repair provision method. 1 lakh rupees worth asset, life may be 5 years. So what you have to do? 20,000 is the depreciation. Not only this, you have to add for some repairs also expected. For the over the 10 years, 5 years period, you expect around 50,000 rupees repairs. Then what you do? You divide this one also and consider this part of your depreciation amount. So depreciation amount is nothing but your original investment. Okay, original investment you have to calculate for what? For the repair also. Original cost, estimated repair cost should also be considered. So original cost plus repair cost. From there, scrap value is subtracted. This is called repairs provisions method. Okay, so we have completed all the models. So here the finally machine hour method. So very simple. Machine purchased for 5 lakhs with a scrap value 1 lakh. Life of running being 2 lakhs machine hours. So original value 5 lakhs, scrap value 1 lakh, 2 lakhs machine hours it will work. It means rupee 2 per machine hour. Okay. Depreciation being for every 1 hour, the depreciation being 2 rupees. This is called machine hour rate method. Now, original value 5 lakhs, depreciation for the first year. How many machine hours we worked for the very first year? 50,000 per hour, the depreciation being 2. 50 into 2, 1 lakh. If I subtract the 4 lakhs is the WD value. For the second year, depreciation being, we have worked 2 lakhs hours per hour, 2 rupees means 2 lakhs. WDV for the second year, 2 lakhs. Depreciation for the third year, 50,000 into 2, 1 lakh. So finally, you will get the scrap value. This is machine hour rate method. Or you can use the production unit method also. In case production units method, how do we calculate? Depreciation is equal to original value minus scrap value divided by number of units capable of producing. 5 lakhs minus scrap value 1 lakh divided by number of units can be produced being 1 lakh. It means 4 rupees. Depreciation rupees 4 per unit. So depreciation every year will be this one. Number of units produced in the year multiplied with the depreciation per unit. So 25 into 4, again you will get the same 1 lakh. 50 into 4, you will get 2 lakhs here. 25 into 4, 1 lakh. Initially 5 lakhs, first year 1 lakh depreciation is done and then balance is 4 lakhs. From 4, 2 lakhs is subtracted, 2 lakhs is the WD. From the 2 lakhs, 1 lakhs is subtracted, the scrap value being 1 lakh. Is that clear? That's how you can get the answer. With that, some of the variations also we have completed. Clear?